So I've got Scott Jackson here with Cross Country Mortgage, and very experienced guy. I thought he was a good person to bring to this podcast because the plethora of experience, the number of buyers he's worked with in the past, and also he's been super informative, even just coaching me on a lot of the current market trends, where things are going, where things have come from to get to this point. So Scott Jackson, just wanted to bring in, I'm going to ask you a bunch of questions. Can you take some time to just quickly introduce yourself?
Scott Jackson, Cross Country Mortgage. Originally started with RPM Mortgage. They got bought out by Cross Country. So I've been doing this 7 years now, roughly, somewhere around there. Mm-hmm. Yeah, that's pretty much it.
And what were you doing before mortgages?
Before mortgages, I managed Verizon wireless stores for about 13 years. Mm-hmm. So just driving traffic, customer experience, that kind of thing.
What was it about the mortgage industry that you thought, was something cool to maybe dive into?
Flexibility, like kind of work-life balance, being able to be a little bit more involved with like kids' lives and stuff like that, especially they were starting to grow up.
Your kids' lives?
Yeah, my kids' lives.
For sure.
Not your kids. They were starting to grow up and everything, so I wanted to be more involved with their sports and, just a little more freedom, was the kind of main thing. So
you know what, man, that's actually one of the beauties about working in our industries, I guess, is we control our destiny, so to speak. But they say it's easy to make money, but it's also easy not to make money in our industry.
Yeah.
And could be the gift and the curse.
Yeah,
right?
Freedom is always a blessing and a curse.
100%. Yeah. 100%. So
you're always working, but you can always, take a step out and stuff
big
like
time.
That. So yeah.
Big time. Obviously, we had a pretty good run from 2020, 2021, and the early part of 2022. I think a lot of our interest rates were, lingering in the 2 and 3%. All of a sudden, late 2022 or mid 2022, looks like the Feds increased our rates, maybe to cap inflation or what have you. What's your perspective right now on where we are as it relates to interest rates, and where do you think we're headed with interest rates?
Yeah, it depends, so, hopefully the trend is down, obviously, right? The Fed's been talking that they are hopefully going to start pulling back, but also like when the Fed lowers the rate, it doesn't directly affect home interest rates. It affects like consumer interest rates. So like credit cards, HELOCs, that kind of thing, but makes money cheaper for like businesses and, consumers in general, which then hopefully will bring down interest rates for like housing and everything at the same time.
That's pretty interesting. You said something about like making money cheaper.
Yeah.
What does that mean? So you and I understand what that means, but to the average consumer, somebody who's, not looking at how the finance market works every day, what does that mean to make money cheaper?
Make it cheaper to borrow. So, that could be monthly payments, right, with like a HELOC. It could be monthly payments within like a mortgage. It could be credit card, percentage that you're like paying every month and everything like that.
For sure.
So basically the more access to money for people, or the easier access to it, the more spending, and the more competition overall. So
Gotcha. It's crazy, man, because right now we don't like high interest rates.
Yeah.
If you're a mortgage borrower, but if you have money in a bank,
yeah, it's great.
We love interest rates. We love these interest rates. So it's kind of like pick your poison, I guess, is what it is. Tell us a little bit about, what type of loan programs are out there available to buyers. They could be first-time home buyers, reload buyers. They could be move-up buyers. What options are available, or not even available, because we know what's out there. What's the most popular loan options right now for a buyer looking to purchase a property?
It really just depends like who the buyer is, so it's kind of all across the board. One popular one that everybody has been asking about is like the California Dream for All program, which is like more of a down payment assistance and equity share, thing that we can talk about whenever. But, so a lot of people have been asking for that and then going into a different product once they hear kind of like, the highs and lows of the product and
Right.
everything. FHA is very popular still. VA is still always super popular. There's to the listing agent, but usually that's just because, you know, they don't understand, you know, like the VA loan and things like that. But
Right. FHA loan. There was a point where FHA loans were sort of looked down upon, I guess, because of a, you know, crazy, you know, robust market. Why do you think FHA loans has become a little bit more popular these days?
Just affordability, you know, like usually you can push FHA loan, like the debt to income ratio higher, which most of the time in turn means like a higher qualification for like purchase price.
What's a traditional, you know, debt to income non-FHA for like a conventional loan?
Usually under 50. You know, some jumbo it's going to be under 43, but you know, most of the time it's going to be under 50.
Under 50% debt to income,
front and back ratio. Yeah.
Wow, that's nuts. That's nuts. So you spoke about the California Dream for All program, and I think this program came out. I believe it was sometime last year, 2023.
Yeah,
the first
6-8 months ago.
Yeah, about 6 to 8 months ago.
Yeah.
So sometime in 2023, and I just remember, you know, it was all this hype. It was put out there as first time home buyers are going to get up to 20% down, and I just remember when. As a realtor, when this program came out, I feel like no one I knew ever got it, and then it just went away within like a few weeks or even a month or so. What is it about this time around that makes this program so special? Number one, and number two, how's it work? Like what's the ins and outs? Has anything changed from the last California Dream for All to this one?
Yeah, it's kind of funny. I'm not a huge fan of this program. Basically, the Dream for All program, what it is, they'll give you up to 20% down this time, or $150,000, whichever is less. You know, so like that's first and foremost. And then what it is an equity share, you know, program. So basically, California will share in the equity of your house, right?
Okay.
So let's say, to use easy numbers, you gain $100,000 worth of equity, and you're paying off mortgage or like selling the house or what have you. Basically, they will take 20% of that. You know,
when you sell your property,
yeah, or try to refi out of it, or try to refi out of the program and everything.
Gotcha. So you get the benefit of the down payment assistance program. You get money to help put equity into the property as you purchase, but when you sell, you share that equity with the state. Is it the state who's giving this money up, or who
yeah, so like I wouldn't even say like you're given equity into the house, because technically they don't share in any depreciation as well. So like if your house depreciates, you still owe that 150 grand or whatever the 20% was.
Oh, I see. Okay,
I
got you.
Yeah, they don't share in the loss. They just share like all the benefits.
Oh, I see. So, okay. All right, cool.
Like another big change from last time to this time around is it's kind of like a lottery, you know. So I think they only helped somewhere around 1,500 people last time, and California on average sells about 1,500 homes a day, you know. So you can see how quickly like that went last time. I think it was within a week that the program basically paused and you couldn't apply for it anymore. I was actually lucky enough to get somebody into contract and close with them last time around, but this time you basically have to submit everything up front, get entered into a lottery. If they pick your name, you know, you have a certain amount of time to basically get in a contract, find that house. If you don't, then you get pulled out. Somebody else's name gets pulled back.
I heard also that this time around you have to be a first generation home buyer. What does that mean?
Yeah, so basically, like you and your wife, for example, if both sets of parents owned a home or own a home or have owned one within the last 7 years, then you don't qualify for the program. Or if you own a property yourself within the last 7 years.
So literally first generation homeowner. So your mom or your dad or parents. What about siblings? Can siblings own a home?
They didn't specify that. You know, they just, like in the guide, it just had to do with you and your parents.
Gotcha.
So like even if your parents passed away, if they owned a home within the last 7 years, like you're screwed. basically.
Gotcha. Okay. Screwed in the sense that unfortunately you don't qualify this time for
Yeah,
that down
we got
payment
other
assistance
products
program.
though.
Okay, so you do have other products. Tell us some other products that you or Cross Country Mortgage does offer to first-time home buyers.
Yeah, so there's a bunch. I mean, there's multiple down payment assistance programs. So like Cal HFA also has other, non-California Dream
Yep.
programs. There's like Chinoa Fund, which is basically the same thing. It's just another, down payment assistance program.
Yep.
FHA, VA, low down payment, conventional 3%, 5%, that type of stuff.
So there's a saying, how low can you go?
Yeah.
Right? How low can you go?
3%.
What is that? what is that absolute lowest? What is the lowest down payment a first-time home buyer can buy with?
0% if you're VA or Cal HFA, you can still do like 0% down. So with Cal HFA, you can still do 0% down, and you can have another lien on the property for like closing costs and things.
Mm-hmm.
So you can sometimes come in with like a comical amount of money, like $100,
Mm-hmm.
$200, whatever. So there are programs to where you can still do that, but each one has their drawbacks. Each one, has their benefits, that kind of thing. So
Gotcha.
just depends.
Gotcha.
Yeah,
that's nuts, man. Tell us a little bit about the mortgage underwriting process. So let's say, myself as a realtor, I'm connected with a potential buyer. I go through my dialogue with the buyer. I start coaching them on what steps to take. Typically, the first step after talking to me is talk to a lender, talk to a loan officer. Then I would introduce them to a loan officer. When you're talking with a new buyer, what is that process like for you? What are you asking them to do to get themselves pre-qualified? And, how do they get pre-qualified?
God, I thought you were going to ask me what it entails for you getting pre-qualified. That's a whole nother,
yeah, exactly.
That's a whole nother conversation. But so it depends on like what the client's job is. Like that's heavily dependent on it. So like if they're just a W-2 borrower, salary, it's a super straightforward, easy process. If they're self-employed, commission-based, part-time, they get a lot of overtime, like LEOs or police officers, like that's a different process too. So like if it is something commission-based or something where overtime is a big part of the income, or you have two separate jobs, that kind of thing, it's a little bit deeper than that. So like usually we're going to want to see like year-end pay stubs for last 2 years. We'll get a verification of employment, like just to kind of re-verify that, breakdown in your income and everything. And that's pretty much the same for all that minus self-employed, because they're looking for, underwriters are basically looking for average for like the last 2 years, then also a trend too. So like depending on where we're at currently in the year, like if we're 3, 4, 5 months in and you don't have any of that overtime we're trying to qualify for the last 2 years, they could ask why,
Gotcha.
So like I've had a client before where the majority of their commission was fourth quarter because it was retail based, right? So we got letters of explanation from their boss, and then also like pay stubs from previous to December from the last year, and then current and things like that. So we're still able to use a higher trend than what the current year showed.
I mean, but let's break it down. Let's simplify it a little bit, because I understood everything you were talking about.
Yeah.
But to someone who has never applied for a home loan before, what steps are you having them go through to get pre-qualified for a home loan?
So just like the process in general.
What is the process? What is a basic fundamental process of being pre-approved for a home loan?
Yeah, like step one, just answer any questions they have, just because to kind of gauge where their comfort level is and everything. And then application, we send the application right over to their email. So they just click a secured link. They're able to upload all the documents. So like some of the stuff I already talked about, like pay stubs, W-2s, bank statements, that sort of thing. And then once that's done, we run credit, see what the debt to income ratio is, average out the income, and then kind of give the client like a good gauge on where they're kind of qualified up to. And then, I'll kind of go even more in depth, like, hey, if rates change and go higher, we may want to leave a little bit of a buffer. But if you're looking to push your, qualification higher,
Yeah.
that's where we just communicate like me, you as a realtor, and then also the client, kind of where they want to be.
So it looks like it starts with just getting them to fill out an online loan application.
Yeah.
You're also going to be asking them for pay stubs. Is it 30 or 60 days of pay stubs nowadays?
Usually just like last couple pay stubs. So
Okay.
like if it's every 2 weeks, then it's just the last month.
So pay stubs, application, pay stubs, tax returns.
So like if they're W-2, you don't necessarily need tax returns unless they own other properties or business or something like that, because then you need to see like if they're net lossing like their rental property or something like that.
I see. Gotcha. Okay. I mean, it seems pretty straightforward. I know that when I talk to clients, what I tell them is getting a home loan is somewhat similar to, buying a car. Like you literally walk in the dealership, after you pick a car, you go into the financing, you fill out an application, they run your credit, tell you you're approved. I mean, is that the gist of how getting pre-approved for a home loan is?
Well, like for a car loan, they don't verify anything.
Mm-hmm.
Like you could say you make $400,000 and they'll just take your word for it. They really just care about like the credit number and everything. But so yeah, it's definitely a little bit more involved than that. So
Gotcha. So in a competitive real estate market, primarily, or if we dig deeper into this, when you're in a competitive offer situation, what are some of the things that you're telling your buyers that helps their offer get accepted?
So yeah, I mean, the biggest thing is the relationship between like me and you, for example. Like I think that's the biggest one that helps get offers accepted. So like usually for me, I'll call the listing agent and everything like that, make them feel more secure, about the client, the financing, and then just me as like a lender in general. But I mean, I've called some listing agents where they'll ask me how long I've been working with a realtor before. And that's important to them, like just because they know everybody's kind of on the same page and it's going to move quick.
No, I get that. I've had situations where my buyer's offer wasn't accepted because they didn't know who I was. And they were pretty open about that. They said, the offer that was accepted, it was similar to yours, but we also know the lender, we know the realtor, we've worked with them in the past, so that stuff really does matter. What are some of the common misconceptions of having a larger down payment versus a smaller, lesser down payment, so to speak?
So some of that, also earlier you kind of touched on like FHA having like a stigma, like same thing with like VA, like when somebody's submitting with it, just because VA, for example, everybody thinks the house is going to get denied, right?
Sure.
But it's like very basic. Same thing with FHA. It's like very basic things like, does the light switch have a cover on it that's not broken? Like little things. Is there a tripping hazard? Is the fence falling down? It's very basic things. And same thing with like VA. VA, everybody thinks pest is a really big issue. But I mean, if there's no real dry rot, like is the house on like a slab foundation, for example, if it's on a slab foundation, really nobody's gonna find like termites unless you literally see termites crawling across the ground, right? Because there's no crawl space, there's nothing. So it's just knowledge about like what the program is and everything that kind of helps out with that.
When I bought my first property, I put this was during the subprime years, I literally put no money down.
It
was 100% financing. It was an 80% first loan, 20% second loan. Stated income, meaning I told them what I earned based on the industry that I was in at the time. Verified assets, so they saw that I had, at least a couple of months of mortgage reserves in the bank. That's a trip because I've actually been able to have offers accepted with 3% down payment borrowers. And we went up against, someone who was putting 20, 30% down and still beat them out. So I personally, I believe that it is a misconception. Honestly, I also think that it is a lack of educated realtors even.
No, 100%.
Because they're
especially with VA.
Yeah, especially with VA. They don't understand what a VA is, or
Yeah.
that VA even means Veterans Administration.
Yeah.
They don't understand what FHA is, which means Federal Housing Administration. Can you speak a little bit about how a VA loan works on your end, and how an FHA loan works on your end?
Yeah. Like I've literally had a listing agent tell me when we submitted a VA loan, can they go conventional? I'm like, you understand, like they're going to get a lower interest rate with VA. There's zero mortgage insurance, even if it's 100% financed. Like this is going to be.
But why is that? Why is a 100% no down payment loan have no mortgage insurance? That just seems a little odd to me.
Well, it's just like one of the benefits that we give, not we the lender, but like just in general, one of the benefits of our military service people and everything. So it's a great product, it's a great program, and like I said, there's a couple things with like the inspection of the property, but it's usually very minimal. Again, it's like an education thing.
Gotcha. So my understanding when it comes to the VA stuff is even the FHA loans is these loans are insured by the feds. If you ever default on this loan or you foreclose on this loan, the lender who lent the money will be repaid by the government, essentially.
Right.
The total length of the loan, I guess, is what it is, by 4 months, 6 months, even a year, if you pay another $20 a month or $50 a month in addition. So I took that. I'm not a
big fan for that, though, actually. I mean, you're basically giving the lender access to their money quicker, on the tail end of it. But I mean, with any loan, even if it's a car loan or whatever, the majority of the interest is paid all up front, and then it's very little interest towards the back end of it.
Correct.
Correct. So, I mean, for me personally, like, sure, there are little benefits, other than just paying it off, earlier by doing that. But it's harder to access money, than it is to, like, for example, like if you took that $20, $100 or whatever every month and just put it in a separate account, like in case you need that money, it's easier to access that money now than it would be to now do a HELOC or something else, to where now you're paying an even higher interest rate on that money that you already have.
Right, because the money's liquid. I mean, you said, you can quickly access it.
And gotcha. Especially like if you're already in like a low interest rate loan,
right?
Like paying off that quicker, like you're probably never going to be able to get that cheap of money again.
So in the beginning, or actually towards the tail end of 2023, there was a lot of speculation about the Feds decreasing or dropping interest rates. We read that there was going to be 3 interest rate drops throughout this year, each of them happening after the end of each quarter. Where are the interest rates at now, and where do you anticipate them to be at the end of the year?
Yeah, so it varies on a week-to-week or day-to-day basis. So like if we were talking week and a half ago, I'd say low 6s,
for what, a 30-year?
Yeah, like for 30-year, for FHA, for VA, for what have you, even like high 5s for FHA and VA. Now that we're talking this week, I would say, high 6s, low 7s, just because
for a 30-year loan.
Yeah.
You said high 6s?
Yeah, like mid high 6s, so everything's increased over the last week, and without necessarily a real rhyme or reason for it, it's just the market kind of being funky. I mean, there's little bits, but not enough to really raise the interest rate that much. But yeah, like so supposedly the Fed is talking about hopefully bringing the rate down, which hopefully, I mean, because God knows, right? Like, because they were even talking the other day about like not lowering it, for at least the first time, potentially. Just it depends on like data and things like that. So hopefully they'll start bringing them down, which indirectly affects mortgage rates, because whenever the Fed actually lowers the rate, it affects HELOCs, consumer debt, so like credit cards and things like that, and then indirectly will affect mortgage rates.
So when I talk to buyers, I say the same thing. No one really knows. No one has this crystal ball.
Right. I'd be in a different industry.
I know, right? I'd be pretty wealthy. But I do give them some insight. I tell them right now we're kind of lingering in the mid to high sixes. I anticipate by the end of the year that we're going to be at least in the low sixes. Would you say that that's a fair assessment?
Yeah, I mean, it was low sixes last week,
Oh, wow.
or a week and a half ago. So, I think low sixes is, definitely reasonable. And again, I'm hoping for even fives, and things, but, we'll kind of see where it is. I think the trend is going to be, some lows and some highs every once in a while. And again, it's going to be like a week to week basis. I mean, I tell my clients, like, don't focus so much on the interest rate, focus on what we can do to make it lower for your situation, right? So is that bumping up your credit score a little bit before you purchase? Is that, more down payment? Is that, like those different kind of ins and outs and everything?
It's actually a trip because right now interest rate is is probably the number one topic of discussion.
Oh yeah.
When it comes to buyers. What I'm telling buyers is don't wait. Get yourself in the door, because if you're pre-qualified for a home loan and you're qualified for, I don't know, a certain amount of money, you're probably not going to be in that much more competition, or that much competition. I guess it's case by case, but you're not going to be in that much competition, not like it used to be.
Right.
But when interest rates drop, what do you think is going to happen? I think everybody's going to come out the woodworks, wanting to purchase a property, and now you're in deeper competition.
Yeah.
Is that sort of the narrative that you speak about too when it comes to buyers?
Yeah. I mean, anytime like the news will put something on saying like, hey, rates lowered this week, or, it's the lowest out of the last 6 months, or what have you, all of a sudden you'll see, your calls getting answered, and things like that.
Yeah.
Or more people like actually talking to you about it. And then that's the first thing that they mention is, hey, I heard the rates went down. What is it now? So, I mean, if the rates do continue to go down, it's just going to add more and more people back into, the purchase market. So
yeah, exactly.
With not too much inventory.
Exactly. Cool, man. Well, Scott Jackson of Cross Country Mortgage, thank you for taking the time out to speaking with me and, sharing some of your insight. We will share this with a lot of potential buyers out there and, our audience. So thanks again, Scott.